Hello everyone. It's a little over 4 p.m. when the market where the market closed today. It's Monday, August 29, 2022. So let's review and make a recap of the trades I made today in the markets I normally trade. Today I did trade ES for and scratch. Basically it's $25 loss in two trades, and that is what you see over here in this area here. So I'm gonna review why I took them and why I shouldn't, but that is the two trades I made. And then 17 trades in NQ. I do have a little bit of miscalculation in the trades in NQ, so I'm a little bit off in my count with what the software Ninja Trader tells me I made. So today is 1440, $1,440 for the NQ and ES. Didn't trade crude, and I didn't trade gold. Okay, so let's review the market action. Let's focus on the anchor chart first, which is this one here. I'm gonna expand it. I'm having a little bit of problem with my mouse today, so hopefully I can review this with no more major complications. So you see that AES is a range day. Now, did I predict that it was going to be a range day? Yes. There were a couple of indications that gave me that opinion. First one is this big down move that we had on Friday. Okay, so the whole day on Friday was given here lower lows and lower highs, but in summary, it was a big move on Friday. So most of the time you do have a down day with congestion, followed by congestion, unless the market really keeps moving. Now we are going to see to what direction this one is going. Probably most likely is going to go in the direction of the current trend, right? So it's going to go down, and I'm going to review the market forecast for SPY that is going to give me an indication if the market will continue to sell off or not. So I for that you may look at the blog that I have in the comment section for this video, and you will see that what my indicators are for identifying what direction the market could go. Not normally it does. There's more probability that it does based on those indicators that it doesn't. So the other possibility is that the market recovers and goes to prior days highs to revisit the this area right here, which is the upper end of that day of Friday. So today my bias overnight was, I mean, when I see the market overnight before the market opened at 9:30, right around this time here where the darker area is, you will see that this is pointing out to be a range market right there. Okay, so what do I do when I identify a range market? I mark it. So basically what I do is to go to my tools here. I do have a Fibonacci here, and then from here I try to identify where the most area, or the area with most touches are. And for me, it was this area right here. So I'm gonna mark it now. I'm gonna go from here to the lower lows right there. So the high end of this range is up here, and then extremely oversold right there, and then overbought, and then oversold would be this one here, and then immediately below that is that area down here at 39.6478. So for me, it was going to be a range market throughout the day, which proved true. So basically, you see here you have up, down, up, down, up, down, up. Well, it didn't go down this way, but you get the idea, right? You get that high and that low. That is the range. But basically, my mark is the most touches overnight, and then with a little bit of overshoot in this area right here, right? And then with a potential overshoot in the other direction as well. So that is the anchor chart. Now let's review the entry chart. Entry chart is right here. Let me open this. There are two trades, and I'm going to tell you why I took these trades. First of all, you have to have a story behind you, right? So my story was, okay, it is a range day. It's going to visit the upper side of this area, and then the lower side of this area. Second, if you see here, I saw this formation. So you have a high, a low, a high, a low, and then a high touching that area right here, that one there, and then going down. What I saw here was a head and shoulder, which has been triggered right here. So I anticipated that, and I was wrong. So my anticipation was that it was going to move in this direction to at least to touch this area of the bottom of the head and shoulder. So the head and shoulder would have, if it had continued, would have been all the way down there. So you have the head and one shoulder and the other shoulder. It didn't do that, and it went and reversed on me, but it was okay. So that entry there was taken one tick below this bar right here, and then I was stopped out right there. The loss on that one was, let me review it there in my other screen where I took my notes. That one was $350 loss right there. Okay, second entry was here, and this one was good for a target. So you see what happened here is that it was given a bounce out of the 18 EMA right there. That is the bounce, and then the second break, which is this candle right here, that one there, I took one tick below that red brick, the first red brick after this retracement, and then the first target went off there, and the second target went off. The stop was done right there. So the first target and the second target was for $325. So if you combine both of the trades, it's going to be actually minus $25. So ES, that was it, and I didn't take any more. I was actually out of my home office at around 8:30. Okay, so so from here to there, I didn't see a trade, but I took this one probably in a mistake because it was okay. It was good to take the risk there. Now market continues to move up, down, but in the range, you see. So it was up in the upper side of this area and then came back down. And then close there. So it is closing bearish. Actually, the 30 minutes on the close, let me show you that. The 30 minutes in the close give this move to the upside, but then coming back to the 50. Let me open it for you guys. Came back down to close at the 50 SMA. Okay, my thinking now is that this market is going to either continue to move down for another day or break the 4,000 to the downside. We'll see. I mean, nothing is for sure. It's only probabilities. But you see that the momentum here is turning negative. And in the 30 minutes, and you have good support right here to be broken. So we'll see if it recovers and moved up or not. Okay, so that is ES. There's a couple of entries here that I was looking, but I'm not bullish in this market. So when it went to the upper side, probably I should assume that it was going to go at least to this area here, like it did at the end of the day, by 4 p.m. Like it did at the end of the day, but in general it was up here, and I was not thinking on for me the market is bearish, so I was not thinking on counter trend trade the price action we saw on Friday. Let's review NQ, where the action was for me. Bunch of trades, but not that much money to be made. Or that I made. So I'm gonna review the setups. So basically, let me open the anchor chart. Okay, before I see or review NQ, let me remind you to subscribe and set up an alert on your subscription to the YouTube channel. So if you really like this video, also click the like button. I do trade in Apex funding. So in that way, I don't have any risk of trading. It's their money that I'm using, and I initially paid a monthly fee for doing it until you pass the test that they make. Okay. So also I do have a blog. That I review technical signals of the market and stocks in general. And then a reminder that I'm not a financial advisor, so trade at your own risk. I'm just sharing my personal trading strategy. So trading futures can be a very risky, but also can give you a lot of rewards if you know what you're doing. So if you have a question, make a comment, make it in the comments on this video, and also you can subscribe to my Discord server. It's free. Both links are, or the link is actually below in the commentary section or the description of this video. Okay, so let's continue with NQ. So this is the anchor chart. You saw during the opening, or not the opening, the overnight, you see that it's also a range very similar to ES. Okay, so my expectation by connecting the upper side of this area to the downside of this area by all these points that are touching, that one there, that one there, that one there, and that one there is very close to each other. And then in the lower side, you see that you have one touch there, one touch there, another touch there. So for me, that was good enough to indicate, okay, this is not a trending market, this is a range market. Now, effectively, the market moved to the red zone right there, and then to the red, and continue moving in the red zone right in between that point and this point in this square, in this rectangle there, then came and violated this. If you see, there is a opening range right there. So these tops were in the opening range and then moved to the lower side of this, but it broke. Let me change the color right here. So it broke there, broke down, and so this is the anchor chart. Okay, so then the market continued moving sideways, and then came back and close to the lower part of the opening range. Okay, so let's review the 30 minutes, the 30 minutes as well. After this big monster moved on Friday on the bearish side, right there. Okay, now the market consolidated as a very similar to what happened in ES. And I did take some, because I'm bearish in this one. I was not willing to take any bullish trade, but I took bearish trades, and I was in congestion, so some more risky entries, but that was okay. So let me go here and open the entry chart. So we review, I'm not going to review them all, but some of the trades I made and some of the congestion I should probably have avoided. Okay, so let's go to, I'm going to go here to the beginning of the day, or actually before the market opened. First trade was this one here at 12,506.75 right there. And let me okay, so so that one, this one is $225, and you see the entry was right there. It is a counter trend trade. I saw this nice move to the upside right there, going away before the market opened, going away of this high right there, and then the market started to turn back, and I took that trade, and I was thinking, okay, this one is going to be either a break even or a profitable. The entry was right there. Let me get it right there, one tick below, and the first target was right there, and I was stopped in here. Okay, so one target off, and then one tick above the reversal. That one is $225. Second one was a loss. Okay, so there, a market open. Remember, I told you as I was not in my home office by until probably 10, and so the market moved a little bit with very nice, a couple of good entries to the upside. Probably I would not have taken it anyways because I'm bearish in this market, but in the intraday, probably it has been, it would have been a good idea to, oh my, I clicked the wrong button. Okay. So this is the 10 a.m. when I came back there, and I saw that there is a congestion, and I tried to anticipate the move to the downside off of this week out of the 50 SMA moving average. So you see there's that is the setup. This is the entry. It's still in congestion. So risky, yes, very risky, and I was punished for that. The market never went below there to the downside, but it bounced away right there. Okay. So that one was a $170 loss. Then the market get a bounce right here, now in the range. Probably, let me see if okay. So you see there that I have this same drawing on the Fibonacci's that I normally do in there, and we are in the upper side of this channel now. Did it again. Okay. I think I was there. Okay, so now again I am bearish, thinking, okay, this thing is going to come down and it's going to reverse, but it actually ranged for about 10 minutes, and in these 10 minutes I took a couple of losses, and well, more than a couple of losses, but I did have some good it was break even after all. So basically, let's review. So I did enter that one there in a short, and I was stopped out right there. Okay, so a loss. That one, I believe that was $180 down. Now I took this one here, and then I was stopped out again, right there. That one was probably $300. Then I took this one, let's see, that entry there, and then one target and one break even. Then I took this entry here and reversed on me right there. And then I took this one here, which is, this one is a good setup, actually. These are not. I mean, these are counter trend trades, lots of risk. So if you want to avoid trading and be in and out, avoid this area here, upper side of very close to the opening range, and then you see how the market is ranging here. Okay, and then finally it broke to the downside. I took this entry right here when it broke, which is this one here, and again I was stopped. I was stopped out. Okay, and now I took an entry right there. No, I took it right. Well, where was that? I took it right here. No, okay, I got it now. So this is what I did. I took the entry right there, and then that is the first target, and this one here is the reversal. So I sold that one there, and my thought was, okay, it's failing this area here, it's going to move again to the upside right there. So one was good and the other one was not. So that one was probably $145. There's a couple of trades here that were $500 down. So anyways, then I took this one here, and you see this is the runner I wanted to catch from up here, but it actually, the setup is good right in this candle, which I didn't take. So that is the setup right there, and that is the entry, right? What is the setup? It's a wick out of the 34 EMA right there. And oh, actually I did take it right there. So this one was good. I took it right there, and this is the first target right there, and then the stop on the runner was right here. Okay, that one was for $1,300. Okay, so that was kind of the big trade of the day. The rest of them were you know, $300 here, $300 there, and so on. Basically, since I was bearish, I continued to take short trades. I continued to take short trades right there, right there. Those are my entries, and then this is stop loss. This is one target, and this one is a stop for the second one. So this one was good twice for profit. Another entry right here, bouncing out of the cloud. So, you know, wick out of the cloud or bouncing out of the cloud. That one was entered there, first target there, and stopped when it came back right there. Okay, I just sold it because I saw, okay, it's coming back down. I put my stop you know, right above this candle, and I was sold out. Then here I took another one target, one stop. Okay, all in the choppy area. Okay, and then finally broke down, and I didn't take it. Okay, you know, anyways. Another trade. And let me explain you what the setup here was. So this one here, that one there, is the opening range. Okay, so I took a break off of the opening range, good for one target, and stopped out right here. Okay, and that candle right there. Okay, another short wick out of the cloud again, and then crossing below the moving averages. Most likely at that point, that stacker was bread as well. So I took that one, and then that is one target right there, and then another stop. another take right there, or a break even there and a stop there. Okay, so that one was a loss as well. In here, bounce out of the opening range, going into a similar high right here. So let me show you that one. So you have this area here, and then breaking below the cloud, and the wick is out of this opening range. I took that one, and this one was good for one target right there. And then the second one was a stop very close to the opening, so probably a break even. And then I was done. I thought, okay, so now the market is doing its thing, it's below, it's in this gray area. I'm not going to trade anymore. And so noon came, and then at 11:30 I was kind of like, let's see it. Yeah, so at 11:20 I said, okay, that's it. I'm at 1440, and I'm good. So range day is, I don't want to take any additional risk. There is a good nice move to the upside here, but there's it's also drifting higher. It was not very clean, and it was very kind of choppy on these reversals. So you would be doing what I was doing in the first in the morning. So lots of choppiness, and yeah. Let's see, afternoon moved up, down, up, down. Okay, that was it. Yeah, I didn't trade in the afternoon at all. Okay. Now let's see gold. Gold had a, let me open here. I'm going to review I didn't do any trades, so okay, I'm going to review gold in here. So there was overnight going bearish. Now I thought at this point on the 30 minutes that this was going to go down, back down again. So for me, gold was bearish at this point right here. You see here, there is, in this area, there is some congestion. And I was thinking, okay, this one is going to come down basically to touch probably that moving average right there, right? So it started to look bearish, but stayed, in this range. It didn't trigger any entry on the bearish side. It was kind of quiet today, actually. You see here that down move, and then up move, and then down, and it's actually at 10 a.m. it was this market was done. So in the entry chart, you see though that there is a good entries to the upside. So that one there is a good one. There is some congestion right here, and then there's a break to the other side. I'm gonna put it just there. There's a break all the way from here to the other side, right there, and then came back down, up, down, and didn't do anything in the afternoon. It was slow in the afternoon, actually, for all the markets in terms of price movement. Now let's review crude. Crude has a very nice, had a very nice run, drifting anyways, but it was a nice run to the upside. So you see the 30 minutes chart right here in the lower left corner. You see that there's a really nice move after a consolidation range that right here. Bounced a couple of times out of the 50 simple moving average and move all the way up. I did not take any crude trades today. It was a good move in the morning and nothing in the afternoon. In the anchor chart for Renko, you see that there's it's uptrending, no doubt about it. So it was moving. And I do have USO in a swing trade, bullish. So I'm bullish in the market, but I didn't take any trades there. And then the entry chart. Let's finally review this one. So bounce here out of this smooth 50. There's a bounce here that failed right there. Came back down. There's a bounce here to the upside. That was probably a very close to break even or a scratch right there. That one there is good for one target at least. Yes, one target, and then the second one sold for a profit. This one here, one target and a profit. Then you have a range here. If you took entries here, probably you would be with this one here, probably you would be okay in between all of them, but it is actually a congestion area. Came back down, insinuated that wanted to go to the south or bearish trend right there, but it failed and then came back up. Another failed entry there. So it was not a really very clean market to trade, even though the 30 minutes would give you an upside, with a very good bullish direction. But there were plenty of areas that were congestion. Right here you have another one, but then this one broke to the upside very nicely by the 1 p.m. and then started to move before market open. It didn't do that much. Okay, so those are the trades and my analysis of the market today. If you like the video, just hit the like button, and thank you so much for watching it. See you next time.